You don't need to be a millionaire to make money in crypto. You don't even need to trade every day or spend hours watching charts. All you really need is a strategy. A simple, smart, and passive strategy that can turn even a small investment, like $100, into lifetime crypto income. In this video, we're not chasing quick flips or meme coin hype. We're talking about real passive income built on solid crypto fundamentals, staking, yield strategies, and projects that pay you while you sleep. So grab your coffee, sit back, and let's talk about how a simple $100 can become your entry ticket into financial freedom. The kind that doesn't depend on daily trades or luck, but on building assets that work for you 24/7. Let's start with mindset. Because before the money grows, the mind has to grow first. $100 might not seem like much today. Most people spend that on a single meal, a few hours of entertainment, or something that's forgotten tomorrow. But the truth is, when invested intelligently in crypto, that same $100 can start compounding quietly in the background, turning into something much bigger over time. The secret is patience. Crypto rewards people who think in years, not days. Those who build passive income in this space understand one rule. Wealth is built when your money starts working harder than you do. In traditional finance, that means dividend stocks or real estate. In crypto, that means staking, lending, and earning yield from blockchain activity. Just like real estate pays rent, crypto can pay you yield. You just need to position yourself on the right side of the network. Now, what exactly is passive crypto income? Simply put, it's money you earn automatically. You're not trading. You're not glued to charts. You're not taking emotional bets. It's about owning assets that pay you over and over again. There are 4 main ways to earn passive crypto income: staking, yield farming, or liquidity providing, lending, and revenue sharing through real yield projects. These are the building blocks of lifetime income in crypto. Let's start by building your foundation. You have $100. The goal is not to double it overnight. The goal is to make it start generating cash flow. Here's a balanced way to allocate that $100 for long-term passive income. $40 goes into staking solid Layer 1 coins, Ethereum, Cardano, or Solana. These are proven networks with strong communities and consistent returns. Staking Ethereum, for example, earns around 4 to 5% per year. Cardano, around 3 to 5%. Solana, roughly 7%, depending on the validator. These rewards are paid in the same coin, which means as the asset grows, your earnings grow too. Another $30 can go into decentralized finance, or DeFi. Platforms like Uniswap, Aave, or PancakeSwap allow small investors to earn yield by providing liquidity or lending out tokens. These systems can earn anywhere from 5 to 15% annually, depending on the asset pair and the platform. And these are not random numbers. These are based on real trading activity and interest demand. Then, $20 can go into revenue-sharing tokens. These are tokens that give you a share of the platform's profit. Actual income, not inflated rewards. Examples include GMX, which pays holders a portion of trading fees in Ethereum, or Radiant Capital, which shares revenue from cross-chain lending. These are what many call real yield projects. They distribute real profits to token holders. They can be a game changer when held long-term. Finally, use $10 for exploration. Newer projects, emerging sectors like AI tokens, gaming tokens, or real-world asset projects that tokenize things like real estate or bonds. These are high-risk, high-reward areas, and your small exposure can potentially bring big upside over time. By diversifying like this, you're not gambling. you're building a balanced ecosystem of income streams that pay you from multiple directions. Now, let's look deeper at staking, because this is the core of crypto passive income. When you stake your tokens, you're helping the blockchain operate securely. In return, the network rewards you. It's like earning dividends for supporting a company, but in a decentralized way. Ethereum, for instance, currently offers about 4 to 5% per year in staking rewards. Cardano's pools average around 4%. Solana validators can earn up to 7 or 8%, depending on uptime and performance. Now imagine staking $40 worth of Ethereum. You reinvest your rewards monthly, and you hold for 5 years. Even with modest growth, your 40 can become $50 or $55, purely from staking. And remember, if the price of Ethereum itself rises during that time, your total value compounds even faster. This is the power of earning yield on an appreciating asset. Next, let's talk about DeFi, decentralized finance. This is where your crypto starts working harder for you. In DeFi, your tokens can be lent out, traded against, or used as liquidity, and you earn a portion of the fees generated from that activity. It's like being the house in a casino. Every time someone trades, swaps, or borrows, you get a small share. Platforms like Aave or Compound are leading examples. They let you lend stablecoins or major assets safely through smart contracts. The interest you earn is often higher than traditional banks, sometimes 5 to 10 times more. But here's the golden rule. Only use top-tier audited platforms. Stick to major assets like ETH, BTC, or USDC. And always avoid projects offering thousands of % in APY. Those are almost always unsustainable. In DeFi, slow and steady wins the race. Now comes the exciting part. Real yield projects. This is one of the strongest trends in crypto's future of passive income. Instead of paying users with newly printed tokens, these platforms share actual revenue. For example, GMX pays you in Ethereum from real trading volume. If the platform generates $1 million in trading fees in a day, part of that goes to GMX stakers. It's real value, backed by real activity. DYDX works in a similar way, rewarding traders and stakers from its platform revenue. These kinds of tokens build sustainable long-term income because they're tied to utility, not hype. The secret behind turning $100 into lifetime income isn't magic, it's compounding. When you earn rewards from staking or yield, don't just cash out. Reinvest. Add them back to your portfolio. Even small reinvestments build powerful momentum over time. Let's say your $100 earns 10% per year. That's $10. Reinvest it. Next year, you earn on 110. The year after, on 121. Keep this going for 10 years, and you've nearly doubled your money without adding more capital. Now add in asset growth. If the tokens themselves appreciate, your income snowballs even faster. That's how long-term crypto investors quietly grow wealth, not by trading, but by compounding yield. Now here's something important: the crypto dividend mindset. Most people see crypto as a gamble. They buy and pray for the price to rise. But smart investors think differently. They treat each coin like a small business. Every token in your portfolio should have a job: to generate income. Whether through staking, lending, or real yield, your crypto should pay you regularly. Ask yourself this: if your crypto never went up in price again, would it still earn you something every month? If the answer is yes, you're building true financial independence. Because you're not relying on hype, you're relying on cash flow. That's the difference between speculation and wealth building. Of course, no passive income is truly passive without safety. Security is everything in crypto. Always use hardware wallets like Ledger or Trezor for storing assets long-term. Only stake through official or audited platforms. Never connect your wallet to random sites. And when exploring DeFi, always read the audits and community reviews. If something promises unrealistic returns, walk away. It's better to earn steady income for 10 years than to chase something flashy that disappears in 10 days. Now let's talk about the long-term vision. What does lifetime crypto income actually look like? Imagine that you've been consistently staking, reinvesting, and diversifying for a few years. Your initial $100 grows, you add a little more when you can, and the market slowly matures. Over time, your portfolio reaches $10,000. Earning even a modest 8% annually, that's $800 a year, or around $67 a month, in passive income. Without trading, without selling, just from holding and compounding. That's when your portfolio becomes self-sustaining. The rewards it generates can be reinvested again or even used to pay bills or invest elsewhere. That's the essence of lifetime crypto income. You're no longer working for your money. Your crypto is working for you. There are also some powerful bonus strategies that many people overlook. The first is node rewards. Some networks, like Flux, Avalanche, or Chainlink, allow users to run or share nodes that help operate the blockchain. These nodes earn you steady income, similar to staking, but often with higher potential. It used to require technical knowledge, but now there are node-sharing platforms that make it simple even for small investors. Another hidden opportunity is staking-related airdrops. Many projects reward active stakers or liquidity providers with free token airdrops during new launches. For example, early Uniswap users were rewarded with valuable UNI tokens just for using the platform. Staying active in DeFi can earn you surprising extra income through these airdrops. And then there's one of the most promising frontiers, tokenized real-world assets. Platforms like Ondo Finance and Centrifuge are bringing traditional investments like U.S. Treasury bonds, real estate, and business loans onto the blockchain. These assets generate real yield from real cash flow, offering stable, regulated, and reliable returns. It's where crypto meets the real economy, and it's one of the most sustainable ways to earn passive income moving forward. So, let's wrap it all up. Turning $100 into lifetime crypto income isn't about luck or hype. It's about strategy. It's about building slowly, diversifying smartly, and compounding consistently. You start small, you stay disciplined, and you let time do the heavy lifting. You stake quality assets, you earn yield, you reinvest, and you grow. Crypto isn't just about making money fast. It's about creating systems that keep paying you forever. Whether it's staking Ethereum, earning real yield with GMX, or exploring tokenized assets, the formula never changes. Invest smart, reinvest your profits, and think long-term. Because the earlier you start, the sooner your crypto can begin to work for you, and not the other way around. Financial freedom isn't built overnight. It's built through habits, consistency, patience, and understanding that small investments, when guided by knowledge and time, can become something extraordinary. That's the true power of crypto passive income, and that's how you turn $100 into a lifetime of earnings. So if you found this helpful, make sure to subscribe for more, because in the next video, we'll explore the top crypto projects that pay you every single day, even when the markets sleep. Until then, keep learning, keep earning, and remember, the future of wealth isn't about working harder. It's about letting your crypto work smarter.